Welcome back to the channel of truth, trust, and transparency. Today, I'm answering another one of your questions in the YouTube comments, which was, Dave, can you do a video regarding the pros and cons of refinancing your property investment home loan? Now, just before we dig in, and I've said it on a couple of videos lately, YouTube tells me that 70% of the people that watch my videos aren't subscribed yet. So if that is you, I would appreciate it if you could subscribe. If I need to do a video to tackle any property related question that you have to get your subscription, then leave it in the comments and I'm happy to do it and address it and help you out. As always, I don't have a plan or goal in terms of time length for this video. I'm going to give you the value, tell you what I know, pros and cons, and leave you with that golden nugget in as quick as possible with none of that other bullshit fluff that you see around there. So I'll start off with, I'll go pro for con, and go back and forth like that. First and foremost, one of the pros is going to be a potentially a lower rate. Potentially a lower rate. Now, remember when I say this is that interest rates shouldn't be the number one reason that you choose a bank. I've done a video on this on regards to what else you need to choose and what else you need to think about. I'll link it here for you so you can go and watch that. But in case you guys didn't know, is when you go to a new banks kind of treat their new customers or new business better than their current customers because they want to bring in the new business. So they'll give you a slightly delicious rate that looks enticing to be able to pull you in when you're going to a new bank. So that would be a pro, is that when you're moving that home loan to another, when you're moving that home loan and you're refinancing it to another bank, that new bank is going to be like, oh, look, Dave, we want your business. Here's a really juicy rate. Now, one of the cons that comes with this is going to be paperwork. Now, some people love it, some people hate it. It's obviously a pain in the ass, I get that, but you got to sign some forms, you got to go through a couple of little hurdles, couple of little hoops. Some people see that as a con and a bad thing. Now, obviously, if you're okay with doing a little bit of work, it's not too bad. Paperwork, in my opinion, is get it done once, and then you can worry about that in a few years' time if you need to refinance again. But you're setting up a 30-year home loan. So remember, paperwork, one and done, get it out of the way. Refinancing as well is less paperwork compared to if you're going for a brand new home loan. So that's one of the, I suppose, benefits of the paperwork. It's not as much. Nonetheless, it is a con. The second pro/con is going to be, I've put it in both piles, right? Now, it can be a pro and it can be a con. Now, what do I mean by this? Let me explain. It depends on what your strategy is for that particular property. And what I mean by that is, if I am a property investor and I have a investment property and I'm going to refinance it, and the goal is I am in the accumulation phase of my property journey, which a lot of you guys are if you're watching YouTube videos, you're learning, gaining that sort of knowledge. If you're in the accumulation, the goal is to keep costs as low as possible in terms of cash flow, whilst rents increase to cover that shortfall. Now, when I refinance, let's just say I have a 5-year interest-only home loan. 5 years interest only. Oh my God. 5 years interest-only home loan. After 5 years, what I can do when I refinance it with another bank is I can push that loan back out to 30 years and make sure my repayments are smaller. That's good because upfront and cash flow wise, it means that if I push the length of the loan back out, I pay smaller repayments. Now, that is the pro because obviously the upfront cash flow. It can be seen as a con. Why? Because if I restart that loan process and I drag it out for another 30 years, remember you're paying interest on that entire 30 years. However, as I said at the start of this, it's going to depend on what the particular strategy is with that property. I know that if I'm selling that property in 10 years' time, 5 years' time, I can push it out because the amount of interest I pay is marginal in terms of extra interest. Compared to, let's say, for example, if it was your owner occupied, I would want to refinance and keep the same length of the loan term, but just get a better rate. So if I'm living in a PPR and my goal is we just want to pay this down to finish it, then it doesn't make sense for me to push it out another 30 years because I'm just going to incur all that extra interest and pay it back to the bank. So I'd keep that same loan term. I'd keep that same loan term amount, but just try to get a better rate to bring down those expenses. However, if I'm investor, I know I'm going to sell that, then I can quite easily kick it out another 5 years, kick it out back to 30. Now that might be the strategy for the first 5 years. And then after 5 years, when I refinance then and rents have increased and my cash flow looks better and I've finished my accumulation phase, then when I refinance, I may keep that loan term the same at 25 years instead of going back out and pushing it down and down further. Especially if that particular property that I'm going to buy for my portfolio is one I'm going to hold until the end, I might want to look to start to creep up on paying that one down, whilst the other properties in my portfolio that I've kicked out that loan term on are the ones that I'm going to sell anyway to get the capital to pay down those type of loans. So that's why strategy is very important on terms of what that vehicle, what that property as a vehicle is doing for you in your particular portfolio. Hope that made sense. If it doesn't, drop a question. But length of the loan can either be a pro or con, depending how you're looking at it, how you're framing it, what is the goal of that particular property in your portfolio. Now, the next, it's going to be a little bit of a pro, of course, is being able to do a cashback. Cashback, fantastic, great. Or you'll have these other banks that say, look, if you come and join us on XYZ, we'll give you $5,000, $6,000, $10,000. That's great. I will leave an asterisk on this one, and I will say, make sure your broker runs the numbers and we're not just refinancing to another bank to get $5,000 and doing all that work, and then it gets eaten away in fees. It's the same interest rate, all those kinds of things. So get your broker to run the numbers, and it can be a pro to get that cash back. Obviously, $5,000 refinance or anything like that, it'll cover those property costs. That's even a small little reno cost. Now, another thing, another slight con, depending who you talk to, cred, if I can spell it again, every time you're going for those refinance and those finance applications, you're adding those marks onto your credit score. So that can be a con depending on how you frame that up and your credit score having those applications for finance on there again and again and again. Obviously, that might affect some people. It might not affect others. Obviously, the deal is to get it, and the objective is to get it financed and approved. So it's not as if you're going for a home loan and getting rejected back. But I just want to highlight that one there as a potential con, not the end of the world, of course. Another good pro is access equity. We love this one. So we might refinance, and whilst we're in that refinance application, we might do an equity withdrawal. Now, the best time, in my opinion, to get that equity is when it's available. Sit that in the offset account, or sit that in that offset account, or sit that in the account so it's there ready to use. You might not need it yet, but it's good to have it available so that you can strike really quick while the iron is hot. Okay, number 4 in terms of cons is going to be costs. Now, it's not as bad as you think, but you got to read the fine print and get your broker to read the fine print, because depending on the type of bank, they'll have establishment fees, they'll have account setup fees. They sometimes also have annual fees, so you got to watch and remember those. But that's going to be a con because it's an additional cost that you as the property investor will unfortunately have. It might not be a huge cost, but nonetheless an extra cost to you when you're refinancing is going to be a con. So make sure your broker knows the ins and outs. This is why you need to use a broker as well, because your broker will know all the different banks and all the different policies and know what banks have those high setup and establishment costs, what banks don't, and then be able to feed that into you when they give you those options in terms of the refinances. Refinancing, another one that kind of, another bonus. This one probably ties into the rate one, and that is you're saving money. Obviously, you need to make sure and double check that the money that you save per month that you always hear and see on Facebook ads and hear mortgage brokers talk about, you need to make sure that the money you're saving is still on the same loan term. Because some brokers will say, oh yeah, we can refinance you and save you $1,000 a month. And you go, far out, that's perfect. But what they've just done is push that new loan out to another 30 years. So you need to make sure that you can save money, but just make sure you're comparing apples with apples when you're doing it. It's not your broker pulling the wool over your eyes a little bit, not explaining the entire story to you, okay? The last con, in my opinion, is going to be LMI. Sort of comes under costs, but LMI separately, meaning if you are refinancing and you're taking that loan to an LVR greater than 80%, LVR is the loan to value ratio. So if you're buying $1 million property and you have $950,000 of debt and you're refinancing to another bank, that bank will potentially look at that and say, look, well, LMI is applicable on this loan because we see that as high risk compared to if your LVR was a little bit lower, say at $800,000 on $1 million asset, that's an 80% LVR. If you're at 80%, you won't be charged LMI, but if you do creep above that 80% LMI, that 80% LVR, there is a good chance that you might be pinged with LMI. So one to keep in your head. Number 6 is going to be access to features. Access to features and products. So what do I mean by this? Obviously, if you've had a bank or you've had a loan for 5 years and you're refinancing, the mortgage and banking space is changing on a monthly basis, and banks are bringing out all sorts of features. We heard ANZ the other day say that they're bringing in a 10-year interest-only loan. So there's going to be a lot more features, policies, products available. And when you refinance, you will then have access to those particular features and be able to maybe get into something that is a little bit more suited to you. That bank or that loan that you had originally was just one you had to roll into. There's a new feature or the new policy that you'll be able to get into. So look, that's pros and cons. I think another pro as well, just off the top of my head, is values. I'm going to say value exploitation. Now, what do I mean by that? Obviously, different banks will value property at different levels. Take that $1 million property, for example. There might be a bank that values that at 1.1. There might be a bank that values that at 950. You're able to exploit the highest value from that bank and say, look, I'm going to go pick this bank. It gives me a high valuation. It means I can withdraw more equity. It means I can go again sooner. So you're able to play that game compared to if you didn't refinance. Obviously, the bank that you're currently with will be able to revalue the property, and it might only come back at 950. Whereas your broker can play the field a little bit and say, this is the property. Can we get some vals done across the board? And we're able to exploit who values it the most. That is the name of the game. Being able to get the most value for your property, get that equity release that you can service, obviously, and be able to move and roll into the next one. But ladies and gentlemen, that is, in my opinion, the pros and the cons to refinancing. I think it's obviously stacked on the pro side. Obviously, not financial advice, speak to your mortgage broker, but make sure you are speaking to a mortgage broker that can run the scenario across multiple banks. Happy to suggest you a couple if you need them. I don't get kickbacks, referrals or anything. You don't even have to tell them that I introduce you to them, but that's what I would do, get the broker to run those numbers and just to see what it's like. Keep these things in mind. And I think refinancing as well, my number one tip is the length of the loan. Just make sure you're comparing apples with apples. Any thoughts, questions, emotions, anything like that, leave a comment and I'm happy to address them or come back with another video 2.0. I've done that before. As always, guys, I'll see you tomorrow.